Hi there, welcome to GrainTV. I'm Kevin McNew. It's Friday, April 22nd. What a day it was in the grains. Let's take a look at the grain hedge trading platform and see where we closed. In Chicago, beans got hammered to the downside, giving up 30 cents a bushel on front month May, and corn lost 12 3/4, and wheat almost losing 30 cents a bushel. News today was really just focusing on the improving situation in Argentina. Yesterday, the Argentina's Buenos Aires Grain Exchange said they pegged the Argentina crop loss in soybeans at 4 million metric tons versus the 60 million metric ton crop previously forecast. So that got the market spooked, and today was just more selling. Traders had been looking for anywhere from a 10 to 15 million metric ton loss because of the flood damage, and even though this is still an early stage guesstimate, the fact that they didn't confirm a relatively big loss like traders had been looking for, that got people really spooked, and we saw it start yesterday and just really catapult substantially lower today, with beans losing 30 cents a bushel. As we look at the weather situation in Argentina, the forecast looks for an improved drying condition. The rains that were in much of northern Argentina are now actually going to move north into southern 2/3 of Brazil, which is positive for the corn crop there, which has been suffering from some dryness. So overall, this is really not a good story to keep this bull market alive. We're expecting Brazil to get some rains where they've needed them, and Argentina to not get rains where they don't need them. And overall, this is setting the stage for what could be a really painful ride lower as we move into next week's trade. Other news out today after the close, we saw large positions in soybeans for the hedge funds. They were long, exceptionally long, not surprising going into Tuesday's numbers. We suspect they probably exited. Today's estimates put them liquidating about 20,000, but they are probably still long in soybeans, and so this sets the stage for some risk sell-off as we come into next week's trade, unless weather conditions change dramatically from what we see today. Other things to keep in mind: the CME has raised margin rates on soybeans, and so that too will probably take some of the bull enthusiasm out of this market. As margin rates go up, that will force some of these people, especially those that went underwater today, to liquidate, because margin rates are now 16% higher. Let's take a look at beans, and I really want to talk about beans because farmers, I think, need to pay close attention to what's going on. I know this is planting season, I know everyone's busy, but this may be one of the better prime opportunities we will have with soybeans approaching or hitting their 8-month high and then backing off. We still have very strong prices. This is November beans, new crop beans, and I want to focus on where we were in February, which set the insurance price at $8.85. So in February, the average for November beans was $8.85. If you're tied to insurance, which most of you are, that is your base for your insurance policy. Keep in mind that we are so well above that, even with today and yesterday's sell-off. We're still around $9.80 for new crop beans, and if you buy a put option on a $9.60 put, you can put a floor around $9.20. So even with today's sell-off, there is still, in my opinion, very good opportunity to lock in a price floor, much better than when we were a month ago before all this rally got started. And I do think that is a wise decision, in my opinion. We don't see any problems in the U.S. situation. We still have ample bean supplies, not only in the world, but in the U.S. And this disruption, if it does turn out to be something south of 10 million metric tons, will probably lead to a short-lived rally that we are seeing now. So without a U.S. weather scare, this may be the farmer's best chance. And like I said, taking the advantage of this rally and locking in a price floor may be a really wise decision. If you have questions about how to do that or want to open a trading account with GrainHedge, by all means visit us online at grainhedge.com. We can help you do that at very, very low cost, $7 a trade, to help you protect that soybean crop. That's all we got for today. Have a great weekend. We'll see you on Monday. As a GrainHedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at GrainHedge.com to become a client.